Now, the liquidity crunch in Treasuries has led to a $5 trillion promise from the Fed to calm markets. As market watchers chart the origins of the cash drain, one small corner of the bond market has come under scrutiny. Here with the details is Bloomberg's Dani Burger. Good morning, Dani.
Good morning, Anna. Well, I have the origin story for that cash drain, which I think is fascinating. So let me walk you through the timeline events. The coronavirus scares caused people to want to move into Treasuries. But what do you do when you want to buy Treasuries? You buy the most liquid asset, and that's futures. So in terms of that, you see futures all of a sudden start to rise in the bond market, but the cash underlying doesn't have the same effect. So check out what this spread did. It absolutely blows up. So this is 2-year bonds. The future price skyrockets while the underlying cash market stands still. So you usually have a bunch of leverage traders in here who play the spread when it's really, really small. So they have a lot of money borrowed to be able to play this. But when that blows up, all of a sudden their risk limits, the alarms go off, so they pull back and they don't want to be in this trade anymore. Enter real money. So these are large investors who typically don't use leverage. All of a sudden they say, look at all this yield I can make. There's a lot of money. So they step in and start to play this spread. But they own things like this, commercial paper, FX exchange forwards. All of a sudden they need to allocate into this future cash spread, and they need to get that money from somewhere. So here is where they pull it from. And this is where the problem arises. All of these huge traders take a bunch of money away from things like commercial paper. And we know that this is what the Fed has stepped in to buy, because these are things that companies use to fund their payrolls, they use to fund investments, and all of these real money investors no longer are playing in this pool. Liquidity is pulled away. Now, in terms of how this actually played out, what it affected, we'll never know the exact victims of this liquidity drain. But it's clear that real money had a really big impact here. And you saw before on that other trade, the spread has come back somewhat. So it's likely not as many people playing this trade as they had, but still ongoing, leading to that liquidity crunch, Anna.
Yeah,